Today we'll discuss our module 4, analyze the capital investment appraisal for taxation purpose. This is a math. Within this math, most of the technique is in one math. So after completing this math, we will be understand what is payback, discounting payback, accounting rate of return, net present value, profitability index, internal rate of return. Now it is very important for the net present value. We always use it. Net NPV, IRR is a very vital and common thing for the accountant. So once you understand the discounted payback, NPV is so easy. Here we are saying that NPV is the final running total number. That is the example is the NPVs that all here we are taking that. Basically NPV and discounted payback are the same idea, but NPV taking the all cash flow. Payback period not taking that all cash flow because only break-even point they close it. So discounted payback is a period of time and NPV is the final amount. You get the adding all the discounted cash flow together. If the NPV is positive, we will approve the project. Here, look here. So in this figure, this is the 5 years cash inflow, and with this cash inflow, if we multiply 5 years PV factor, we can take from the sheet also is given in our question here. Look here, this is the 10% PV factor, all 5 years. So taking this PV factor, if we multiply 70,000 multiply by 0.931, this come here cash flow. Same way second year, and also in the year 3, if we multiply with 30,000 with our PV factor 0.7513, and then we will get 22,539. Same way in the year 4 and 5 we can do it easily, and we will get all cash flow. It is the discounted cash flow, and if we add all discounted cash flow, we will get present value, not net present value, present value. If we add all, we will get present value. Total present value of the project is 1,55,629 at the rate of 10% discounting factor. But if we increase or add with another, for example, with the 15% discount factor, that would be the less, because discounting based on the discounting factor, all here as also is the as per the question, their expected rate of return is 10%. So that's why is the minimum PV factor we use 10%, and cash outflow was 1,50,000. So with this outflow, if we adjust it, we will get net present value. N means net present value. This the net present value is positive 5,629. So it is the easy way for calculating the net present value. Is the after yeah.
স্যার পিভি ফ্যাক্টরের যে 10% ধরছেন, এটা কি স্যার মানে এটা 12%, 15% বা 50%? এটা স্যার বেসটা কি স্যার, আমরা কিভাবে ধরব স্যার? এটা
ব্যাপারটা হচ্ছে কোশ্চেনে একটা জিনিস থাকবে, যে কোনটা থাকে, আমরা যখনই কাজ করে যে এখানে বলছে কস্ট অফ ক্যাপিটাল, যে তার ক্যাপিটালের কস্ট হচ্ছে 10%, তাহলে আমরা এটা ন্যূনতম তার এখানে পিভি ফ্যাক্টর যে তার 10% উঠে আসতেই হবে, কারণ সে যে ফান্ডিং করবে, ফান্ড আনবে, তার কস্ট হলো 10%। তাহলে ওই 10% আমরা ন্যূনতম বেস ধরা যায় যে আমি এত পার্সেন্ট তার, এটা মানে কি তার একটা ডিসকাউন্টিং করা হচ্ছে, আমি যাই ইনকাম হবে তা কিন্তু 10% এখানে খেয়ে ফেলবে। 10% আমরা যখন এই যে টাইম ভ্যালু অফ মানিকে অ্যাডজাস্ট করতেছি 10% আমার লেস হবেই, তো সেই 10% এখানে ধরে নেওয়া হয়েছে যেহেতু তার বেসটা 10%।
স্যার এটা আমি কেন বললাম স্যার, এখন আমি এখন যে প্রতিষ্ঠানে আছি এটা স্যার একটা রিয়েল এস্টেট প্রতিষ্ঠান।
জি
এখন ওইখানে স্যার প্রজেক্ট গুলো যে চয়েস করবে,
জি
মনে করেন স্যার আমি একটা প্রজেক্টে 5 কোটি টাকা ইনভেস্ট করব।
জি
তো স্যার আমি এটা এনপিবির নেট প্রেজেন্ট ভ্যালুর ভিত্তিতে এটা মূল্যায়ন করব, মানে এটা অ্যাকসেপ্টেবল অর নট।
জি
এখন স্যার আপনি যে 10% স্যার ধরছেন, এটা স্যার এক্ষেত্রে স্যার আমি কিভাবে স্যার এটাকে মানে মানে 10%টাকে কিভাবে ইয়ে করব,
সেটা
এটা কি
এখানে
ফিক্সড কিনা?
আপনাকে আরেকটা কাজ করতে হবে, এক্সপেক্টেড রেট অফ রিটার্ন, আপনার কতটুকু চাহিদা আছে। যেমন মনে করেন যে আমি মনে করেন আপনি ব্যাংক থেকে লোন আনবেন, সেটা হলো 9% ইন্টারেস্ট আছে, আছে না?
জি স্যার।
আচ্ছা,
জি স্যার।
এখন আপনার কিন্তু অ্যাডমিনিস্ট্রেটিভ কস্ট আছে, সেটার একটা
জি
পার্সেন্টেজ
স্যার।
আছে। হ্যাঁ, আপনার কোম্পানি খালি শুধু কাজ করে যাবে, প্রফিট করবে না, এবং তার তো নিজস্ব একটা এক্সপেকটেশন আছে যে আমি আমার ইনভেস্ট করে এই কাজ টাজ করে আমি এত পার্সেন্ট রিটার্ন চাই। তাহলে এক্সপেক্টেড রেট অফ রিটার্ন আপনার 15% হতে পারে,
জি স্যার।
16% হতে হবে। হ্যাঁ, তখন আপনার 15% ধরে আপনাকে কাউন্ট করতে হবে, বুঝছেন? ওটা হলে ডিপেন্ড করবে আপনার কোম্পানির পলিসি অনুযায়ী এবং আপনার ম্যানেজমেন্ট কিভাবে জিনিসটাকে চায়। যেমন আপনি ধরেন যে আপনার সমস্ত টাকাগুলো আপনি ধারে আনবেন, লোন করে আনবেন। একসময় ছিল না
জি
যেমন
স্যার।
18-20%ও আপনার কিন্তু ইন্টারেস্ট ছিল। এই যে লিজিং এ
জি
এখনো
স্যার।
কিন্তু 12% আছে, ব্যাংকে
16% আছে।
9% করছে, কিন্তু লিজিং এ তো 9% করে নাই এখনো, ওইটার জন্য ইয়েও হয় নাই। তো জিনিসটা এরকম হচ্ছে, একসময় ব্যাংকই ছিল আপনার 17-18%ও ছিল, তখন আপনি আমি এফডিআর রাখছি 12%-এ, রাখছেন না? এফডিআরও
জি
ছিল
স্যার।
তখন 12, এখন হলো এফডিআর এ 3%ও এফডিআর রাখে না,
3%।
বুঝছেন? এফডিআর 3%, হাইয়েস্ট তো 6%, যেহেতু ডিপোজিটরিয়া 3%ও রাখে না। কিন্তু এগুলো ডিপেন্ড করবে আপনার কোম্পানির প্যাটার্ন অনুযায়ী। আপনি দেখবেন যে আমি যেহেতু ধারে আনবো, আমার 9% হলো আমার ইন্টারেস্ট আছে, অ্যাডমিনিস্ট্রেটিভ কস্ট আমার 2% যদি হয়, আমি আরো এখানে আরো ধরো আরো 4% যদি বা 5% আমার যদি রিটার্ন আমি চাই এক্সট্রা, তাহলে আপনার ধরেন 15% বা 16% হিসেবে আপনার তখন এটাকে ইফেক্ট দিবেন, এনপিভির সাথে অ্যাডজাস্ট করবেন, বুঝছেন?
জি
ওটা হলো
স্যার।
ডিপেন্ড
জি
করবে
স্যার।
কোম্পানির পলিসি, এবং এই পলিসিটা আপনাকে অ্যাপ্রুভ করে নিতে হবে আপনার ম্যানেজমেন্টের কাছ থেকে, ডকুমেন্টের এভিডেন্স করে। হ্যাঁ, এটা পাস করে নিতে হবে,
জি,
রেটটা কোনটা
বুঝছি
ধরবে।
স্যার।
ওকে স্যার।
জি স্যার, থ্যাংক ইউ স্যার।
Okay, then so we calculate here the net present value, here positive net present value. Now profitability index is also a factor of project choosing. Also we can say it PI, profitability index. It can be calculated two way. Here one thing is here, PI equal to net present value. Look here, that already we calculate at the rate of 10%. This one divided by, here we divide here, divided by total investment. Our total investment is 1,50,000 plus 1. Why add this plus 1? This plus 1 means 100%. So after calculating this, we will get, what we will get? 1.037. This is the PI. If PI more than 1, then that project should be accepted. 1 mean 100%. এক হচ্ছে আমি যতটুকু ইনভেস্ট করলাম সেটা হচ্ছে 1, এরপরে যতটুকু পজিটিভ হবে সেটা হচ্ছে আমার রিটার্ন। এবং another way we can calculate it here, if we not take the NPV, only take the present value, net present value divided by total investment plus 1. Another thing, present value divided by total investment. There will not to take add the plus 1. Look here, this one, present value divided by total investment, then we will get this one, same figure. So if we calculate with the NPV, then we have to add 1, and if we calculate only PV, then we do not need to add 1. Result would be the same. And within this situation, profitability index, if the result would be 1 plus, then that project we should accept. Otherwise, we will not accept the project, because 1 means the 100%. How much money we invest in the project, that should be returned with the positive one. So our example PI1, for every dollar or taka borrowing in investment, we get back 1.4. What is meaning that? How much money you invest, every taka or every dollar we invest, our return would be 1 plus 0.4 dollar. So this 0.4 is our positive return. So this is the profitability index. Sometimes we are calculating it. Now another most important thing, internal rate of return. Internal rate of return, also we know it IRR, is the amount of profit we get by investing in a certain project. It is a percentage, how much percent. An IRR of 10% mean we make 10% profit per year on the money invested in the project. And why we IRR choose? IRR is the break-even, but where IRR point is there, NPV is 0. Now we will go for calculation is, look here, all cash flow of the project. Here another positive thing of profitability index, here taking the all cash flow and time value of money, all thing calculation considering in the profitability index. And IRR also considering the net present value, considering the time value of money. They are considering all of the cash flow of the project. So here 5 years cash flow is that. And also just few minutes ago we calculate PV factor 10% and we get present value 1,50,629 and their outflow was 1,50,000. So NPV, as we calculate in the just previous one, here NPV we get 5,629 net present value. So when we go for internal rate of return calculation, in this set factor we require minus NPV and plus EPV for adjusting the break even. So how we will get a minus NPV? So if you increase the PV factor, then we will get the minus 1. Here we can take 15% PV factor in the same cash flow. So this 15% PV factor come here. This figure also given in your question. So taking from that, if we multiply 70,000 multiply with that factor 0.8696, we will get 60,872. Same way in the year 5, 10,000 with the multiply of 0.4972, we will get 4,972. So this is another discounting cash flow at the rate of 15%. So total 1,42,000 is the PV of at the rate of 15%. And if we adjust with the outflow, then we will get minus 7,629. So now we have to calculate the IRR, internal rate of return, where the PV factor is 0. Look here, this we can be calculate is another formula. This is the formula where if we get 2 NPV, one positive, another negative, then from that we can calculate the actual IRR. So IRR, look here, IRR equal to here at the rate 1, that means PV factor, here we taking the PV factor 2, one is 10%, another is 15%. So 10% is that lower one plus net present value of lower one, that means 10 at the rate of 10% PV factor, we calculate the NPV, how much money come here, that means lower one, here 5,000, and we should minus for our divided by that NPV of lower one minus NPV of higher one means 15%, B, and multiply by the rate of where discounting factor higher one minus lower one. this way, if we put all data, we will get this one. And here, look here, this is the lower one, 10%, plus here the under summation come here, multiply by 5. How 5 come? 15% minus 10%. So this is totally 12.12%. It is the internal rate of return. So by this project, company will get 12.12% return. 12.12% return. Though its cost of capital is 10%, but company will get 12.12% return. So project is viable. If we see here that one, the decision of that all technique payback, we get 2.66 year result. If you only consider payback period, then you will approve it. You will take the project, just only taking the payback period. And because we get our money back within 2.66 years, discounting payback period, its result as per the question, 4.195 years. Also, it would be approved because we will get back money before the life of the project. Accounting rate of return here, 25%, is a positive accounting rate of return. So we will accept it. And if we see only NPV, then we will get that 5,629 NPV is positive. So our project should be accepted because positive NPV. Because NPV is positive, and reject when NPV is negative. Profitability index is come 1.003. Yes, we should accept it because we will get the money back because NPV is more than 1. IRR, it is also 12.2%. Yes, we will approve the project because the IRR is more than the cost of capital. Here, cost of capital was 10%. So IRR is 12.02%. So it is the more than the cost of capital. So we should accept the project. So this is the decision for an finance guy. Here is the summary of investment appraisal technique. We know we have the different types of techniques: payback period, discounting payback period, net present value, internal rate of return. Also another one is modified internal rate of return and profitability index. So what would be the decision criteria? Payback period, recover investment before a set of period. Discounted payback period also require the money within the period. NPV is positive, then we should accept this. IR is greater than the required rate of return or cost of capital, then we should accept it. MIR is the same way. And profitability index is the greater than 1. If profitability index is greater than 1, then we should accept it. Complexity. Payback period calculation is very easy. Discounting payback also easy. And NPV is time consuming. IRR also time consuming and also calculation, a spreadsheet. Modified same thing. And IRR also time consuming. Time value of money, payback period is ignoring. Discounting payback period, time value of money consider it. NPV, IRR, MIRR and also PI all consider the time value of money. Risks, here payback period, ignore cash flow after cut off debt, that is break even. Discounted same way. NPV applies appropriate level of risks of cash flow. Here this risk is that what PB factor we are taking, this is the risk factor. If it is not the appropriate, then it would be hampering project in future. Same way, So this is the total techniques summary, and this only we are using in business purpose. And we know we have the 7 head of income: salary, interest, security, house property, agriculture, business, profession, capital gain, income from other source. And that of decision we are sometimes taking for the business purpose. What is under section 28 to 30. So it's for the investment purpose, just for understanding. If we took this one math, all technique is within this math. Here you know is the tax here also residental status of SEC. If you go for taxation for individual or company, being you are a tax advisor, you have to think the residual status of the company. For example, any doctor, you are the advisor of a doctor, you are a tax advisor of a doctor. He is working on Apollo or working on United Hospital or Square. That doctor come from the India. So his file in you are the advisor of that doctor, so you have to calculate thing that is the really residential or not tax purpose. So we know this is our fundamental residential criteria calculation. If anyone stay within the country more than 182 days in a year, or 90 days in this year plus 365 days in the last 4 years, he would be the resident. So if doctor within his country 190 days, then he is the resident of that country. So he have to put the tax file, he have to put the submit the return. So this is the logical thing is here, you know it. So this is the just a simple understanding in the math. Residental status of an SEC. One person MMEs provide the following particular in Bangladesh over a period of last 5 years. In the year 14-15, he was in 14 days in our country. Same way, in the year 19-20, in the last year, he was 110 days. So calculation that determine the residual status of the income year 19-20. So in the 19-20, the person is residential or not, we have to calculate it. So we know there is the fundamental thing. If 180 days within the country, he must be a resident and should submit the return. But in this case, in the year 19-20, he is only 110 days. It is the less than of 120. But another condition, if 90 days within this year, but plus 365 days in last 4 years. So here the person have another 4 years or 5 years staying number of days stay in the country. So if we calculation this one, look here, is a resident since the fulfill of second condition. Second condition is that his stay in Bangladesh during income year 1990 110 days, which is more than required 90 days. So it's okay. And then in the year and last 4 years, that means 55 days to 94 days, 531 days during the previous 4 years, which is more than the required 365 days. So in this condition, we can say that the person, he is the resident because he fulfilled this condition, tax condition. Here we know in the year if 90 days, but here is that means that means previous 4 years he that is second condition he fulfilled. Here two condition is that, look here residential, non-resident is easy way. This is condition 1 and this is the condition 2. other thing is very much easy, is the calculation is here. And same to company side, residential status of company. If a deliveries is a partnership firm whose control and management affairs is situated wholly in Bangladesh. Second, control and management affairs partly in Bangladesh. Control and management affairs wholly outside Bangladesh. That is no control in Bangladesh. So what would be the status of that company? Is the residence company or non-residence company? So answer would be that residence, number one, since control and management of affairs is situated wholly in Bangladesh. And second one, partially control, also resident. And third one, no control in countries, so no resident. Since control and management of affairs is situated wholly in outside Bangladesh. So so we can calculate the residential status. Now another one. What is it? What is the ratio analysis? I think you do it in yourself, and answer is here. Easy. And here we are saying another one. That we have calculated different types of ratio here. Liquidity ratio, we know the liquidity ratio is current ratio, quick ratio, cash ratio. Turnover ratio we have seen, inventory turnover ratio, receivable turnover ratio, capital turnover ratio, asset turnover ratio, and also we have seen net working capital ratio, cash conversion cycle. We have seen the operating profit ratio, earnings, return on investment, return on equity, EPS also, and business risk ratio. We have seen operating leverage, financial leverage, also calculating the total leverage, and financial risk factor, debt equity ratio, interest coverage ratio, debt service coverage ratio, and a stability ratio. We have seen fixed asset ratio, ratio to current asset and fixed asset, a proprietary ratio, and conversion financial ratio, fixed interest coverage, fixed dividend coverage, control ratio, capacity ratio, activity ratio, efficiency ratio. That type of ratio within the financial side for good decision making. Here, this one we will do that, and we will close our class. So this one is analyze of tax benefit in capital structure. You are the company tax advisor of a company. The company is going to establish another company and want your suggestion which structure they should take. You should suggest for the tax effective capital structure for new entry, their new company. Supported, and that means here is given the investment required 1 crore for the new project of that company, require 1 crore taka investment, debt 10%. That means if you take the loan from the bank, if you take the debt, you is 10% interest have to pay. If you take the bank loan, here 12%, এটা 9% করা দরকার, এখন তো সরকার হলো 9%, যাও এটা যেটা আছে পরে ঠিক করব না। So a bank loan interest is 12% and income tax 35%. So here 3 pattern. Which one should accept the company for better tax efficiently? That means tax should be payment or others, the value of the firm, how increase. So here 100% equity. If the company this 1 crore take from the 100% equity financing, that what would be the value of the firm? So if we go look on, just we'll see that number one also, just first one. Here in the first one, share capital 1 crore is a total equity capital. So total investment is 1 crore. Here return on investment earning before interest tax, here taking the 20% basic with the earnings to here 20 lakh. So here no bank rate interest, no debt interest, because totally equity financing. No interest should be payment. So here income tax 35%, that means 7 lakh. So return on shareholder equity, this means 13,000. So this 13 lakh. So this 13 lakh is the owner of the shareholder. So this 13 lakhs means that investing 1 crore, getting 13 lakh net profit, is mean that rate of return of equity 13%. Rate of return of equity 13%. So number 1 is okay. Now we will go for number 2. Okay. Number 2 was that 1 crore, 40% would be from equity. That means 40 lakh, the share capital, and 40% debt, mean 40 lakh debt instrument, and 20% loan. That means 20 lakh loan from the bank. So this is the structure. And look here, these 3 items, share capital 40 lakh, bank loan 20 lakh, debt instrument 40 lakh. Total investment is 1 crore. Same as 1 and 2. 1 crore is the same, but structure is different. Here is 3 component. Previously it was only 1 component. So look here. Return on investment, that means earning before interest tax, as 20%, that means 20 lakh. But here we have to pay the interest of bank loan. Bank loan interest 12%. 12% of 20 lakh. So here 2,40,000 have to pay the interest. It is the expense. And again, interest on debt 10%. Debt is 40 lakh. So 10% is 4 lakh. So 6,40,000 have to minus from the return, or that means return on investment 20 lakh. So here net income would be 13,60,000. But previously that net income was 20 lakh. Income is reduced, but look here, though income reduced, the tax is also reduced. So 35% of 13,060 lakh net income multiplied by 35%, 4,76,000 amount of tax have to pay. Previously tax was 7 lakh, but now tax was 4,76,000. Why this difference? Because here all interest, that interest is the allowable expense. So after taking that expense, net profit less than previous. So tax also less. Return on equity shareholder, that time after minusing this tax from the 13,600, we'll get 8,84,000 taka. It is the income after tax. The owner of that amount is the shareholder, real shareholder, equity shareholder. And here in the pattern 2, we have the 40 lakh only equity shareholder. Previously it was 1 crore, but 40 lakh shareholder. So investing 40 lakh, income was 8,84,000. So here rate of return is 22%. Look here, previously invested 1 crore, but their return was 13%. Now invest only 40 crore, but their return is 22 crore. That's why companies is taking the loan, other item in their capital instrument, loan capital, because their rate of return on equity is more higher than not taking that. If they take the loan, their return will be higher. This one. Now number 3. Here equity is 20%, debt is 30%, bank loan 50%. That means bank loan 50 crore, 30 crore debt, and 20 crore equity. If we go for the third option, here, look here, total investment is the same 1 crore, but a structure is different. Share capital 20%, bank loan 50%, that is 50 lakh, and debt 30%. And same way as calculate previous, return on investment earning before interest tax 20 lakh, and from there have to pay the bank loan and debenture, but debt loan. Bank loan 50 lakh multiplied by 12%. 6 lakh is bank loan and 3 lakh is debt loan. That means debt interest. Here 6 lakh bank loan interest and 3 lakh is debt interest. So 11 here, 6, if we minus from this 20 lakh, we will get only net income before tax 11 lakh. And from this 11 lakh, if we pay tax 35%, 3 lakh 85,000, then our net income after tax 7 lakh 15,000. Look here, in the 3 pattern, first net profit after tax was 13 lakh, in the second 8 lakh 84,000, in the third again down 7 lakh 15,000. But here rate of equity return is 36%. How? They invest only 20 lakh in the capital, that means equity capital, and their return is 36,000. So look here, as a tax consultant, you will advise to your company, you should choose the third item, because of here rate of return of equity would be higher than any other pattern. So alternative C is the most tax benefit capital structure. Yes.
Sir, rate of return on equity কি স্যার আমার ইনকাম?
ব্যাপার হচ্ছে কি ইকুইটি হোল্ডাররাই হচ্ছে আপনার নেট প্রফিট যা থাকবে তার মালিক। এটা কিন্তু আপনি যখন লোন আনবেন, লোনের জন্য ইন্টারেস্ট পেমেন্ট করতে হবে। বন্ড যদি করেন ক্যাপিটালে করলেন, সেটার জন্য আপনি বন্ডের ইন্টারেস্ট পেমেন্ট করতে হবে, কিন্তু ওইটা এক সময় আপনি হয়ে যাবে। কিন্তু যারা রিয়াল ওনার, যারা ইনভেস্টমেন্ট করলো, ইকুইটি দিল, নেট প্রফিট যেটা থাকবে সেটার মালিক হচ্ছে গিয়ে রিয়াল ওনার হলো ইকুইটি হোল্ডাররা। এই জন্য আমি ইকুইটি কতটুকু ব্যবহার করে আমার রিটার্নটা কত পার্সেন্ট বাড়লো, আমার এইটার আসলে মালিক তো ওরা, বাকি কিছু সব পেমেন্ট করে দিবে, বুঝছেন? দ্যাটস ওয়াই এখানে এটাও একটা জিনিস দেখো, এখানে বলা হয়েছে লেস ট্যাক্স। দেখেন এখানে কিন্তু ট্যাক্স আপনি কম দিতেছেন, কেননা আপনার অ্যাডজাস্ট হচ্ছে এই যে ইন্টারেস্ট গুলো পেমেন্ট করতেছেন, এটার ভিতরে আপনার ইফেক্টিভ রেট আছে, বাট হায়ার রেট অফ রিটার্ন বা হায়ার রেট অফ ইনভেস্টমেন্ট আপনার। তো দ্যাটস ওয়াই অ্যাজ এন ট্যাক্স অ্যাডভাইজার you have to advise to your client that you should choose, in this case alternative C would be your that means a structure would be more effective than any other structure. Here 20% equity, 30% debt, 50% loan. Okay sir, so I think today we'll closing here. So today we discuss the analysis of capital investor appraisal very shortly, and analysis of capital investor appraisal techniques, analysis of implication tax, and we have seen here the structure of capital structure, how capital structure you can choose, and we did one math where all techniques within that one math. So it's all for today.